So the Roth IRA, generated to make all of our lives wonderful, make us all wealthy individuals, and help us avoid taxes, named after Delaware Senator William Roth, or as if, you know, the inner circle, we like to call him good old Bill. The Roth IRA is the greatest thing. It really is. It's the first thing that I invest in. I try and max it out on the first of every single year, and I kind of want to talk about some of the reasons why and show you what the portfolio looks like now that it is 2022 and I have maxed it out for this year. Not going to lie, I was so close before this year started to getting to a $40,000. Would have been such a nice thumbnail. $40,000 Roth IRA, but the market is down a little bit, so it's not quite there, but I'll show you exactly how much it's worth, how much I've earned since I started investing in the Roth IRA in 2018, and also tell you all of the things that I have invested inside that Roth IRA. So a brief overview of the Roth IRA quickly. If you do not know what it is, I've done videos giving the extreme details of this, as well as talked about it at length on the Average Money podcast with JJ Buckner. It is a great opportunity to take post-tax dollars and invest them inside the Roth IRA, which is the vehicle, right? The Roth IRA is not an investment. You don't invest in a Roth, right? The Roth IRA is the account, like a savings account or a checking account with your bank. This is just a type of account that you open and then you make investments inside of it. But these investments, they are going to grow in value. But the beautiful thing about the Roth IRA is that all of your capital gains growth, all of your dividends, all of the premiums from selling options, all of those are tax-free. So after you let this thing grow for hopefully many, many years, all of the money that you receive out of that is going to be tax-free. Now, because of that tax-free and how great this really is, they do put a limit on how much money that you're allowed to contribute every single year. And they also put a cap on the amount of money that you're allowed to make and still put money into it. Now, there are some loopholes with that. I frankly make more than the income limit, so I have to do something called the backdoor Roth, which is completely legal. It sounds pretty sus, but it's completely legal. I have videos about that. I'll link them down in the description, maybe a pinned comment if you make a little bit more money than the income limit. But they had to limit the amount of money that you could put in, and that money changes over time. When the Roth IRA is first created, the first year that you could contribute was 1998. And at that time, you were only allowed to contribute $2,000. Now that has grown every couple years. There's no steadfast rule. I know people wanted it to jump this year. I think after the inflation this year, I think maybe it'll jump next year. But when I first started contributing in 2018, the limit was $5,500. And now it's up to $6,000. And if you're a little older and things like that, they have catch-up rules where you could contribute $1,000 more. But generally right now, $6,000 a year, which is roughly $500 every single month. Now, if you're married and you have a spouse, these go by social security numbers. So this isn't something you do jointly with your spouse. If you're married, you and your spouse would both have to open one of these. But one of the great features of this as well is if your spouse owns one and something were to happen to you and you were to pass away, your entire Roth IRA can be converted into their Roth IRA completely tax-free as well, which is something that I really love about it. I know that if I pass away, my wife is going to get my entire Roth IRA tax-free like it's been in her account this whole time, and it will continue to grow tax-free. And then also, it passes down to your kids pretty easily as well. There are a little bit of different rules for that. You can check with your CPA or look at that more detailed video. Essentially, they have to take that money out in a certain amount of time. They can't let it grow like your spouse comes. But as far as like what happens after you pass away, very, very favorable, and one of the reasons that I really, really like it. I also really, really like the Roth IRA because I can take my contributions out at any time. This is kind of like a misconception where people think if they put money into a Roth IRA that it's locked up until you're 59 and a half when you're allowed to withdraw the money. But the thing you're allowed to withdraw your money at 59 and a half is the growth. You are not allowed to touch the growth until you're 59 and a half without penalties and things like that. But if you put money into your Roth IRA and you say need that money out, you could take that money out. The only downside of that is if you take it out, you can only put back in what the contribution limit is for that year. So maybe say I needed 10 grand, then I took 10 grand out, which I probably would never do. For that year, I would not be able to put 10 grand back. I would lose that $4,000 because you're only allowed to put back what the contribution limit is for that year. Now, I'm going to bring this up on my phone, guys. I have mine with Vanguard. You can open a Roth IRA with so many different companies now. This is where I started. So like I know M1 Finance, they have a great Roth IRA program. Fidelity, they're all great. It doesn't really matter which company you open your Roth IRA with. The only thing that would be different maybe in this case, but you could find something similar with your broker, is exactly what the investments are, because my investments are primarily Vanguard based. But we can see the account $36,801.02 as of the other day. All time, what that means for me is that I have made $7,770 tax-free, 16% since 2018. Now, I will see, if you look at the chart, it says March 1st, 2019. This is something that everybody needs to know, besides the other biggest mistake of putting money in and then not making an investment. When I did this in March, I put in for 2018 as well. Right now, I am posting this video the first week in March, second week in March of 2022. If you've not contributed to your Roth IRA for 2021 yet, you have until tax day, April 15th, to contribute. Now, maybe you didn't know that and you've already been contributing for 2022. Stop your 2022 contributions and start working towards 2021 up until tax day, and then you will not be able to do that. And on my app, I think it tells me, yes, for 2021, you have, as we see here, 43 more days to contribute to 2020, and you have 407 days, more than a year. So for 2022, you could do this whole calendar year up until April 15th as well. So that's why it says March 19th is when I started. So I've put in 5,500 and then 6,000 all of those other years. So that really is little less than $30,000. So essentially I've gotten more than a full year in 18, 19, 20, 21, 22. So in 5 years, I earned an completely new year, and that's awesome. We could see I wanted to do the 40,000. I'm down 3,800 right now, and that's okay. I know some people like to dollar cost average their Roth throughout the year. I'm more of a lump sum investor. I get it in on the first of the year. Because of that, I took a hit, but I think over time, I don't think that really matters that much. But if I would have had the 38, I would have been able to make that magical thumbnail with the $40,000 Roth. Maybe I'll do that anyway. Just put a little clickbait, put a $40,000 Roth IRA, and we'll see. But over the last year, it's still up 10%, even with this little bit of dip. In 3 years, it doesn't give me that. And like I said, 16% returns over that time. Right now it's empty. I don't have anything in there. Cost basis information. Once again, guys, we don't need to worry about the realized and unrealized losses or gains because this is a tax-free account. Any growth that you get is going to be tax-free, but also any losses that you take, you cannot use those as capital losses either. So it's like a double-edged kind of a sword there. And like I said, it gives you here on the Vanguard app, I'm sure any app that you use, Vanguard's user interface is actually pretty crappy, but here on the Vanguard app, like they tell you exactly where you're at. So here's the holdings, okay? You might want to get a pen because this is going to be a lot. And those of you that have followed me know it's coming, but there are changes. I added a new investment from last year in all my other videos. So if you've been around for a while, a little bit of a curveball. The first thing that I have here, VTSAX, okay? The Vanguard Total Stock Market Index Fund, Admiral shares. You can find a total stock market index fund in all of the major brokerages. I think Fidelity's is FSKAX or something like that, or FRZOX, something. They have a 0% one. This one has an expense ratio of 0.04, so $4 every $10,000 invested. I just like the credibility of Vanguard, and that's kind of like why I started with them in the beginning. But I've put in I have $31,000 in VTSAX right now, up 7,000. Now here's the big change, the big flip. I added VTI this year, okay, which is the ETF version of VTSAX. And there's reasons why I did this. I think here on YouTube, people are starting to know me well for trading options, the wheel strategy, covered calls, things like that. And with VTSAX, because it is a mutual fund and its pricing trades at the end of the day, unlike the ETF, which has like live pricing, it's essentially like a stock. You can't trade options with VTSAX. And I'm not even saying that I want to trade options inside the Roth IRA. I've said many, many times, I think this is like the set it and forget it. That's why people will get in the comments and tell me I should have my dividend stocks in there because the dividends would be tax-free, things like that. I like the set it and forget it. Frankly, this will probably be the last time I look at my Roth IRA statement until next year. I love that I do not have to think about it all, which is why I just have the total stock market in there. Maybe you just want the S&P 500. You might look for something like VOO, the Roman numeral 500, which is Vanguard's S&P 500 index, which is similar to the SPY or other indexes, funds, and ETFs that you've heard. They're all great, and I like the total stock market only because I want some of that indirect international exposure. I want some of those small caps. That's why I personally go with the total stock market index fund. And I only bought 25 shares of VTI, and like I said, you need 100 to trade options. So essentially, I would have to be doing this every 4 years, or it'd take me like 4 years to get to 100 shares. And everyone's like, you can liquidate VTSAX. Like, I'm not looking to trade options inside my Roth IRA. But to be honest, I like the liquidity of VTI, and I like the options that I had with it. So I started adding VTI. I don't see any differences between it and its mutual fund counterpart, VTSAX. So the fact that I have a couple more options with it and I can transfer it to other brokerages quite easily if I needed to, that's really the reason that I went with VTI. And right now in 2022, if I was doing a consulting call or somebody was asking me like what I would do, that's what I would do. I'm probably not going to invest in VTSAX anymore. The good things about VTSAX, like why would people want to do that? You could do automatic contributions into VTSAX, which you cannot do with a mutual fund as far as Vanguard is concerned. So if I wanted to contribute $100 every single week to VTSAX, I could do so. Also with VTSAX, because it's priced at the end of the day, I can get fractional shares of that, which right now Vanguard, oh God, I can't believe I'm saying this and liking Vanguard. They don't do fractional shares of VTI. So essentially what I had to do was buy 25 shares and then I put the rest into VTSAX. But right now I think I am leaning more towards ETFs moving forward, and it's pretty much always going to be the total stock market index fund. I don't have to worry about tax loss harvesting if we have a big dip moving over to VOO because, like I said, there's no taxes inside the Roth, so it doesn't really matter that much. 90% of my investments are in VTSAX and other index funds like it. So I know many of you aren't really that surprised, but I did want to talk about the fact that I have VTI there and remind you, one, start investing, guys. When I first heard about it and I saw the $6,000 max, I thought you either need to max it all or nothing. That's not true, man. If you only have $200, get $200 in for 2021 and then move forward. It's so good that I almost encourage people to do it even before they pay off their debts. I know I can't believe I'm saying that, but because of the time and because of the compound growth and because I've seen now in 5 years that I've made $7,000 of tax-free money, in another 5 years, we're going to be at $20,000 of tax-free money. And, by the time I'm looking to really get to 59.5, I'll have almost a year's salary of tax-free money. It sounds so freaking awesome. I'm even converting other things. Like the Roth IRA, if you do not know about it, it is definitely worth researching, guys. I hope you got some value. Let me know down in the comments below, if you learned something or if you need a follow-up or you have any questions about the Roth IRA. I'll gladly get to them, and I'll catch you guys on the next video.